Welcome to the Why Not Real Estate Podcast, where you will learn top strategies from world-class real estate investors, both large and small. Why not? Tune in and get started today.
How long has this person been in business? And who cares about information? That's cheap. You want application. Now, see, application, that takes experience. You can't be new to this business and jump up, close a deal or two, and really help people apply that information because you yourself have not applied it long enough. So that's how you can really spot a real teacher from a fake teacher in the business, environment, real estate and otherwise.
Hey, what's up, all of my real estate peeps? This is Brian Lucier back on the Why Not Real Estate Podcast, where we believe that multifamily is the hottest investment in real estate. We love the returns. We love what it does. Of all other returns, we love multifamily the best. And this is a special show for me. I've known our guest, I want to say almost 2 decades, and talking in the green room here, he actually looks younger than the last time I saw him. So whatever he's doing it right. Let's get rolling here. So, ladies and gentlemen, our guest today is the Chief Operating Officer and the driving force behind the Broadwell Property Group. He is also the creator of Real Estate Raw, where he teaches entrepreneurs how to invest in multifamily real estate. With over 2 decades of experience and a proven track record of identifying, acquiring, operating, and divesting a large footprint multifamily housing. You can catch our guests on countless podcasts, webinars, as well as presenting on stage at a numerous amount of trade shows and other forums, both online and live in person. He's a real estate entrepreneur and much sought after speaker, an author, and an operator. But his real passion lies in education. He's been a coach and mentor to many of the future titans of multifamily. Over the years, he's counseled hundreds of students who've gone on to close deals worth hundreds of millions of dollars in their own portfolios, who many accredit him to their success. Born and raised in Middle Georgia, where he honed his craft, then moved his operations to the big city of Atlanta in 2015 to expand on his real estate opportunities. Our guest loves gardening, water skiing, hiking, has a wonderful, lovely wife, Yvonne, and 2 dogs, Jake and Lola. Can't forget the pups. Ladies and gentlemen, it is my pleasure, all of my real estate peeps, my honor to introduce to the show Chief Operating Officer behind the Broadwell Property Group, my good friend, Mr. Bill Ham. Bill, welcome to the show.
Thanks for having me on, Brian. Yeah, it has been a while. We've known each other for at least 15 years, easy. So you said that. I just stopped thinking about that. Boy, it's been a while.
Yes, it has. When I started up the show, when I originally did the list, you were on that list, and life got busy. Now here we are, actually recording into our 2nd season, and so happy to have you on here. I do want to do a shout out to the 2 books you have hanging behind you there before we get rolling.
Sure, thank you.
Can you tell our peeps a little bit about that, what it is, and where they might?
Absolutely, yeah. I've been in the business, as you know, I've known you, like I said, about 15 years, and I've been in multifamily about 20 years. And so these are 2 books that I've just written from my experience over those 20 years. The first book here, the first one I wrote was Creative Cash. And this book I wrote a few years ago, but the material actually comes from when I first started to get to know you back around 2012, 2013. We're coming out of that 08 cycle. I was still in Middle Georgia. That market was really sluggish. It didn't rebound very quickly. So we kind of went into that trough, that bottom cycle for a while in Middle Georgia. And my first 402 units, I was able to close with nothing but creative financing. And so this is sort of the book about that journey. And then Real Estate Raw is really just a step-by-step instruction manual for if somebody has never gotten into real estate. That's what that is. You take this step by step, 1, 2, 3. That's what Real Estate Raw is. But the Creative Cash came from back like early on, good 15 years ago now.
Well, I know the story behind Creative Cash from knowing you so long. Absolutely a
Sure.
good read. I'm going to get those on my bookshelf, and I'm probably going to have to add another rack pretty soon.
See that. Phew.
Life has been good here. So, real estate raw, step by step process, Creative Cash
Correct.
explains that process. And your story there was stunning. I remember being riveted in the seat. Some of the chapters you turned there as you were explaining all that. There were a
You
few.
know, we're there for some of those stories. You might read that book and go, I remember that. That's right. That's it's been a while back now. Yeah, yeah. Wound up creating a portfolio of a little over 1,000 units total. Over the years, since I've kind of seen you, built a management company, got it upwards of about 16 employees. So we went completely vertically integrated. And I sold everything off a little over a year and a half ago. Saw the market kind of getting on up there. Predicted rates were gonna. I didn't predict rates were gonna do that, but I thought rates were going to go up some. I didn't see that coming, and just decided it's probably a good time to liquidate. We had some really great offers, and I sold everything. And to answer the question why, profit. Everybody always asks, why'd you sell? What'd you sell your real estate for? We made money. I mean, my partners and I made money. That's the whole point, right? We bought low, we sold high, wait for a little while, jump back in, start over.
That is a reoccurring theme. A lot of the people, Maureen Miles, Aaron Hudson, we've had them
Yes.
on the show. Same story. Everyone's keeping their gunpowder dry. I just literally got back here on the island from Colorado yesterday. Same sentiments there. People are saying probably 12 months to 18 months, all this may turn around. There's starting to be drops of blood in the water. And, folks like you, folks like me, other investors, they're waiting on the sidelines. But
Yeah.
enough about all that. I want to get to your story.
Sure.
So, yeah, and it's so great to see you too, Bill. So, I'm going to rewind the clock a little bit here. If you can, explain to our folks, what did you used to do prior to becoming a real estate
My
investor?
real job in life. Yeah, no, I was actually a corporate pilot prior to real estate. I came out of school, high school, college, and then became a flight instructor and did that for some years. Went through the 9/11 cycle, and aviation really kind of got to be difficult and very competitive to move ahead in your career. I saw a bunch of friends of mine flipping houses, and I thought, well, these people are pretty much idiots like I am, right? They were all hanging out at the bar with me last night. I got up and went to work. They got up and went to real estate. I thought for a little while and thought, something about that's not right. And I studied and read some books and got into real estate. First deal was a duplex, so that's how I got started.
So the big influence for you was friends who you knew who were in
Yeah.
the real estate space.
Yeah, they were just average people doing real estate and not giant deals, not massive apartment complexes, just flipping houses, doing multifamily, small multifamily, things, building little portfolios. And I was just watching what they were doing, thinking these people are the same as I am. There's nothing special about these, they're my friends. And I got the bug and started reading. Started with Rich Dad Poor Dad, like everybody tends to, and just kind of went from there. Got devoured as many books and things as I could, and then got ready and did my first deal, which actually I got seller financing on for the duplex.
So friends influenced you when you were growing up. I mean, you must have had the dream to be a pilot. I mean, either
Yeah, not a real estate investor.
well, what is it? Either a policeman, fireman, pilot, or doctor, or something like
Sure.
that.
Yeah. Right. Exactly. Sure. Yeah. Of course.
So you had your vision, you had that dream, you had that path carved out. Now, was there any other influences, family members, friends, uncles, other than your immediate core that you just mentioned, who may have been in the sidelines to influence you into real estate?
Yes, people that I was around as a pilot, actually, not so much friends and family, other than the friends that I saw kind of flipping houses. And family were all medical, nothing to do with real estate whatsoever, or business really at all. So no, nothing on the family side. Didn't grow up, silver spoon or from a long line of people doing business or anything of that nature. I did meet one of my first business mentors, and I was longer story, but I was flying as a corporate pilot for a physician in Middle Georgia. I was his corporate pilot in his corporation, and I wound up flying one of his friends around to do real estate deals. And so this doctor apparently was investing in these real estate deals with this individual. So I became his sort of winged chauffeur. But the guy started asking me about the airplane one day, and he was like, and I was also a flight instructor. And the guy's like, well, what does this button do? What does that button do? And my creative light bulb went off, and I thought, I tell you what, you teach me business, I'll teach you the airplane, right? And I said, so from taxi to takeoff, I got the plane. Once we get up there, we turn this thing on autopilot. You're going to start teaching me real estate business. Fine, sure, whatever. So, we would go back and forth on our flights, and so that was sort of one of my first exposures to business. But he wasn't a coach or something like that, right? He didn't have some kind of curriculum or something to teach me. I had to kind of have the right questions, and so he was just someone that was willing to talk to me. But if I didn't come with conversation or come with questions, it wasn't like he was just going to teach me the magic or anything like that. But yeah, so that's how I got started.
What an opportunity. And you
Yeah,
put
it's just
yourself
luck.
out there.
Yeah, absolutely.
That's the takeaway there. You put yourself out there, you ask the tough question, I'll show you this, you show me that. And kind of funny that you had a captive audience. It's not like he could have actually
Where's it going?
on you, right?
Right.
That's a really good story. And for any of the peeps out there, find that person who you think might have some answers. And then, like Bill said, ask the right questions, which is actually a great segue to the next question. Here you are, 20 years down the road, 15 years in was it 20 years in multifamily, 15
Now,
years?
yeah, 20 years.
So you've been around the block a few times. You've seen a few cycles. You're preparing right now for the next market cycle, which a lot of investors are. If you could go back in the time machine, this is a two-pronged question. You starting out, if you could give yourself a piece of advice, knowing what you've had to go through, and if there was a newbie watching the show kind of thinking, wow, this real estate thing sounds interesting, what piece of advice would you give for a newbie? So what advice would you give for yourself if you could go back? And what advice would you give for a newbie going forward?
Probably don't overthink the situation. Don't there's no real advice I can give you because it isn't going to matter, because you're going to experience your own situation. No matter how I went back in time and tried to change something, it would just turn into a new path for me to go do new things. Well, that's the same way I look at someone brand new to the business, and they come to me as a teacher and they say, I need you to lay out the path and to tell me exactly how it's going to go so I don't make any of these mistakes and I walk on all the right steps. That's not going to happen. That's nonsense. That's not how this works, right? You're gonna have to just take action. Yes, you can learn. Yes, you can read these books and work with us and stuff like that. But you're gonna have to kind of take your path, and it's gonna unwind as it does. So I don't know how much I really would tell myself, because my path was pretty organic and it worked out. So I think the answer I would give more of the person listening going forward is just get started. Where you can, don't try and go too big to where you don't get started at all. That's a mistake I'm seeing a lot of people make these days. They're kind of getting this go big itis. If I can't do 100 units, then I'm not going to do anything. And that's a mistake. You really got to stop and figure out where you can get started. I started with a duplex. I didn't start off with a big property. So just get started, figure it out along the way. That would be what I would tell myself, and anyone new going forward. Don't overthink it. Just get started.
So I'm going to unpack that one a little bit and pull back the curtain. So we have the newbie. The advice is to get started, and they could be overwhelmed with analysis paralysis. The big shiny object in the room. Do I do this? Do I do this? Do I do this? Do I do it here? Do I do it there? Do I do it there? If you had to say, these are the top 3 things you need to do to actually get started, what would be the number one thing someone who's waking up this morning saying, that's it, I'm going to do this, real estate's my path?
I'll give you the top 4, the top 3 specifically, and then I'll add a bonus. All right, so the top 3 things are exactly what I teach all of my students. You need 3 systems. Now, for this conversation, I'm going to assume you've decided you're buying houses, duplexes, 50 units. You've kind of got some understanding of what you're trying to buy. Let's assume that you do. There are 3 systems you got to have: deal flow, deal analysis, networking. Those are the three things. So if anyone is listening to this and you're ever stuck in your business and you wake up Monday morning and you think, what was I supposed to do again? I'm overwhelmed. I've got all, I read all the books, I got all the information, I listen to all the podcasts, but what is step one again? Somewhere in there, you need to be looking at deal flow. That's, bringing deals in the door on a regular basis. I recommend my students 3 a week. Whatever you're trying to look at, whatever you're trying to buy, you want to be looking at about 3 a week. All right. Second, deal analysis. You got to know what you're looking at. What is a good deal? So if you don't know that, that would be something like get my book, understand the math of what a good deal is. And then third, how you gonna pay for it? Do you have all the money that you need? Do you need some partners? Do you need some investors? That's networking. And that comes from the old your net worth is your network is your net worth sort of comment, right? And so that's what I teach, that 3-prong approach. It's deal flow, bring it in the door on a regular basis, deal analysis, know what you're looking at, the networking, be able to fund these deals on a regular basis. And if you'll set up those 3 systems, you're good. The last thing that I'll add in there is be careful about information these days, right? There are so many people out there, so many gurus now that are essentially failed syndicators. And there's people that were my students a year or two ago. They went out, they syndicated 1 deal, 2 deals. Now they're not making any more money. And so they're going to be a real estate coach and they're going to open up their own real estate business, teaching and this kind of stuff. So the point number 4 that I will give you is that information is really no longer valuable. Don't buy information. It's garbage. Information is easy. It's cheap. Here, you can know everything I know in these 2 books. I think they're like $15 on Amazon. You know what I mean? Chat GPT. Go ask AI. Go to YouTube. Go wherever you want. Information is dripping off the trees. We live in an information inflation world, and information has become next to worthless. So my point here is be very careful about someone selling information. It's cheap. You don't need a teacher or a mentor or someone who's just going to sit here and read you chapters out of books and stuff like that. You need a mentor, someone like Brian here, who has a lot of years of experience in the business, because it's not information, it's application. That's the point number 4, right? Not information, application. Information's easy. That's everywhere. If you're going to work with somebody, you're going to follow somebody, you're going to, really listen to somebody, make sure that they can help you apply the information. Because what I find is all these students wake up Monday morning, and they got all that info rattling around in their head and they go, wait a guess. I go, what's step number 1 again? What am I supposed to do again? And that's right there. That's the spot. Call me, call you, call somebody that can help them go to the next level. But you're gonna want to find someone that can truly help you apply all of this diffuse information that we have flying around the world. And so that's my 4 tips, I guess.
Bonus point number 4 was absolute gold. Information versus application. And thank you for the props, but I'm not doing the darn thing. I'm putting all this stuff out there for free. And
hey, then all the better. So you get excellent expertise, for free. Great. But point being is there's so many people out there right now who are trying to, I don't want to be rude and say fake credibility. It's not that. It's just that they have kind of stalled out in looking at deals. They've stalled out in their own sort of business. And now their idea is what's next. And it's, hey, I'll become a teacher. Okay, I'm not saying don't go teach. I'm just saying with what credibility. And so if you're out here, getting confused at all the different people in the world that are coming at you, take my program, buy my information, drink my Kool-Aid, which there's a lot of these days, this is the sort of acid test I'm giving you. Where was this person in 08, right? How long has this person been in business? And who cares about information? That's cheap. You want application. Now, see, application, that takes experience. You can't be new to this business and jump up, close a deal or 2, and really help people apply that information because you yourself have not applied it long enough. So that's how you can really spot a real teacher from a fake teacher in the business, environment, real estate and otherwise.
Really, really golden stuff. And I just came back from the first live conference I've done since COVID.
There you go.
I've been stranded on a desert island for 3 years talking to the coconut, calling him Wilson.
Thank you. You've been stranded, yeah, and you've been stranded. Yeah, I hear you. Oh man, hopefully I get stranded in paradise one day.
Well, Bill, you know, if you come down and we talk real estate and go out to dinner, this is all.
That's right. I can write it off. Yeah, that's it.
So yes, you can. So I'll stand. We got 5 bedrooms here, so
I love it. I
yeah.
love it. Well, if we're gonna have another pandemic, I will take you up on that.
Oh, I think one just started.
Yeah, I'm on the way. I'm buying a ticket.
Here, I'll book the flight. So
Yeah.
I want to backtrack a little bit. You gave us some really great nuggets there, but you said you were assuming that the investor knew their target. And of course, I'm biased. I love multifamily, but there's so many different ways. You even mentioned you started in a duplex. So if you're out there, you're listening, you're thinking, oh my God, Bill's done thousands of units, and that just like shuts you down. The hardest deal you're going to do is your first deal. So just, I don't care if you throw a dart. No, don't throw a dart. That's not the way to pick a market. Do some research, like Bill said, do a Google search, emerging markets. And I had this conversation all weekend long, you know, going back and forth with investors. They'll ask, well, what market are you in? What market are you in? And don't let that deceive you, because the best market for you to be in is the market you know the best. And for so many people that I even met this weekend, like Bill, who've done thousands of units, they started in their own backyard. They figured it out where it was as low possible risk as possible. They got their operations built, they figured all this stuff out, and then they stepped back and said, well, what if I did a fourplex? What if I did a 12? What if I did a 20? And those what ifs just started to roll out. So don't get afraid of who's delivering the message, because Bill started with a duplex, I started with a triplex, and that was it. It was one deal. So you got to get that one deal. And if you've already done one deal, 10 deals, 100 deals, even better. Bill's got some great advice there, the information versus application. Absolutely. Even for myself, I'm taking notes. Deal flow, deal analysis, networking. This is my first live event. I had a blast. Get out there and meet people. It's safe now. I'm going to keep rolling here. That was the target. I also wanted to go back. You were talking to your friends, probably in the whole 911 world there. They were doing real estate. What was it about real estate that caught your eye? Why real estate?
I could borrow money to do it. You know, leverage, an easy answer. It's like saying, well, maybe I should have bought a bunch of stocks. Right. But I would have had to have had cash to buy stocks, right? Leverage is the one thing that allows people to get into this business because it is a tangible asset. And so, number one, I was able to break in because of the art of leverage and using other people's money. But number two, because it was a tangible asset. So the third factor was now becoming valuable to sellers and to other people by being a problem solver. So I can go out, I can find this tangible asset that I can get leverage on. Now all I got to do is find a seller that for whatever reason is distressed or willing to, give me a break on a deal. And back in that market cycle, there were plenty of those, as I believe there are about to be here in the next year, 2 years going forward. Plenty of distressed sellers looking to just sort of offload. And so that's how I got in with creative financing, not something that works through all market cycles. When the market's just white hot and values are rising, anybody that has a problem will just put their deal on the market, sell it. Why do seller financing or a lease option that you wouldn't? But in those down cycles, when rates are up, lending is tough, that's when that stuff comes in. And that's where it's actually easier to break into the market. It's when the market is super good and the values are high and the realtors are snotty and they don't want to take your call and everybody's all doing good. That's the toughest time. I like a market that's down. That's much easier. So yeah.
Very, very, very good. And I want to add to that it's always the right time to buy real estate, but your toolbox and strategies change in the different markets.
Correct.
So
Yeah.
what we see coming maybe in the next year, 18 months, that book on the wall, Creative Cash.
So I thought you were just about to say something I say on a regular basis. It's always the right time to buy real estate. It's not always the right time to sell it. it's not always the right time to refinance it. It's always the right time to buy it, right? It's always the right time to purchase a good deal. That's never a question. It's just not always the right time to exit that property. And you never want to have a forced exit, right? You make money in real estate when you don't have to sell. So the whole business people kind of think about is about buying real estate, and that's a very small portion of it. It's mostly operations and exit. That's where the money's at. I mean, everybody thinks it's just buy real estate, set it, forget it. No, it's not a rotisserie chicken. That's not how this works. It's buying
Well,
is nice and all that fun stuff, but it's the hold, operate, and exit that's the real gold and where the real money is made. And that's why I always kind of reiterate, it's always time to buy real estate. It's not always time to sell it, not always time to refinance it, but always time to buy.
you're spot on. How many years ago did you unload?
About two now.
Okay, we unloaded around 3 years ago.
Yeah. Okay. Right. So getting, and it was over. It was not all in one day. It was, a cycle of selling off several assets. So it took about a year and a half or so to kind of go through the whole process.
Oh
And
my
we had
God.
the very last one was a nail biter. The rates were just starting to go up. We were having some issues with code enforcement. There was a couple of things percolating, and it went over the finish line. But it was I'm glad we cleared that one, and I'm glad that was said and done because the deals really started getting rocky after that. And I had a lot of people that I saw not close and not complete transactions very shortly after that. That's right when the rates started to really kick in and mess up deals. So
We
lucky.
sold off probably 80% of our portfolio on steroids from October to February. We had like closings every week to 2 weeks, and like the checklists were like, oh God,
Oh, it's fun. Yeah, people. Yeah, you think buying real estate's difficult? Try selling it a time or two. It is just as much work.
Yeah,
Yeah,
and the strategy changes too. I mean, when you're buying real estate, you're looking at it property one way. When you're selling real estate, you want to be on the other side of that lens to make it look attractive.
absolutely.
So I'm going to cap this section of the interview here. So for anybody listening, we have to know our why. Why do you want to do real estate? There has to be that bigger reason. And we could do a whole show on that. But your number one point is your why. Your number 2 point is know your buy box. Now, your buy box may change over time depending on your age, your risk, your market, your finances, whatever. So, number 1 is your why. Number 2 is your buy box. Number 3, that Bill nailed in 4 points, is your operations. You got to know how you're going to do what you're going to do. You don't want to be putting out fires, right? You want to know what's going to happen if this happens. And then number 4 is your exit. And then after you exit, rinse and repeat. Know your markets, know what's going on. Bill, that was really great for saying you didn't know. You gave us a lot of flow, so that was great.
Appreciate it. Thanks. You're welcome.
All right, so we're going to switch gears here. And what would you say was the best deal you had ever done? What type of property was it? How did you find it? And how did you finance it?
All right, I'll give you two answers: the philosophical answer, and then the real answer, right? Because it's funny because you said the toughest. And I'll kind of run on what you said a second ago. You said the toughest deal, you're ever going to close is your first deal, and I thought, well, but there is one other deal that I would actually say is a little bit tougher, and it is actually your first deal, and it's the deal you close before your first deal. It's the first deal you ever close and the last deal you ever close. 6 inches between your ears. That's the toughest piece of real estate to close. 6 inches between your ears, you can close that. Trust me, you close anything else. Sticks, bricks, and mud is nothing compared to mindset and mentality. You close that. Don't worry about it. Now, the real answer, yeah, the best deal I ever did was one in Warner Robins, Georgia. It was 196 units. And it was just, we couldn't stop it from making money. And we tried. It was cash flow. It was hemorrhaging cash flow. It was amazing, and did real well. Wound up selling it. Got a really good return on the sale, but in retrospect, I wish I had not sold that. I wish I'd have just refinanced every so often. Like the top 2% of the world, right? They just refinance their assets every 10 years and pull money out. I wish I'd done that because that thing I got it such a low basis. Steal of a deal, renovated it, turned out to be a property with really good bones, really good solid asset, great location. And we sold and made a lot of money selling, but wish I would have just kept that golden goose and kept the eggs instead of the goose. But that's the way it goes. So that's the best piece of real estate besides the first one. But yeah.
So we know it's a multifamily. So
Yeah.
how did you get the deal? Who presented the deal to you? How did that?
Okay, so oddly enough, it was all the way out on LoopNet. We always joke and say, oh, LoopNet's the graveyard of deals and trash can deals and all this kind of stuff. And I agree, 99.9% of the time, I agree. But in certain market cycles, there are deals that'll wind up on LoopNet. And this one was all the way out there on LoopNet. Now, the LoopNet.com, for anyone who's not familiar with the website or listening, and so it was out there. The catch was this was back when everyone was trying to buy on actuals, and that's how you and I were brought up in the business, and our mentors taught us. You and I sat in the same classes, and we were taught buy on actuals, and that's true in certain cycles, but it's not true, and it's not always true. This was a pro forma deal, and it was at 60% occupancy, 196 units, 60% occupancy. Long story, I did a bunch of research and realized the whole city was like 95% occupancy. It was just this little old fella that had owned the property for like 30 years. It was in a family trust, and they just had a manager that was on autopilot, and just nobody in the family cared. And so I was able to swoop in and scoop this thing up and rapidly bring the occupancy from 60 to 95. And so the purchase price, and this is why everybody was missing the deal, the purchase price with 60% occupancy, yeah, if you're trying to make 60% the new 95 and make all the numbers work on that, which is buy on actuals, it gave you a very low price. Obviously, the seller was never going to sell. So I looked at the deal and said, no, you're all wrong. Obviously, this is a value add. So I bought it, brought the revenue up. Hugely successful deal.
So you mentioned you found it on LoopNet, but you're probably not the one that found it on LoopNet. You have a team.
Well, no, I found it. No, that was back when I was the one. I was always looking at the deals. I was always the tip of the spear, and it was with a realtor. It was actually with a realtor, Mark Smilchap. They had posted it on LoopNet, and I, was perusing around and saw that one and called up the realtor and said, "Hey, looks interesting. Let's do a property tour." Met the realtor, did a property tour, made an offer. That's how I got it.
I'm glad I asked the question because I had an assumption that at that time you had the team. But for any of the listeners out there, Bill just rolled up his sleeve and went to work and did it. He dug through, and you mentioned it was way back there in LoopNet, so I don't imagine that this was the first property that came up in your search. How big?
No, it wasn't. And again, LoopNet is typically kind of a flea market for real estate, right? I mean, it's just a bunch of dead deals laying around on a table usually, and it's not that there's no way a good deal could be on one of those forums. The catch is 1 million people a day log in and poke at all those deals. So if there is any asset there, it's just been viewed tens of thousands of times very quickly in that massive forum of LoopNet, or the other one being Crexi, CREXI.com, another one. Good places to kind of poke around and generally get a feel for your market. But to say that that's where the hot deals are, I would not say that.
So I want to set the perspective for the viewers here. Millions of people hitting it every day. 10,000 people looked at that deal. Flea market, plethora of deals out there, everything from X, Y, and Z, different types of deals. So if you're filtering in, you're looking at your buy box, how many deals do you think you actually, like, I don't know if it's swipe left or swipe right?
Oh gosh, I don't know. I couldn't count. Hundreds, dozens, and dozens, and dozens. I didn't keep track. Years worth of deals.
I think it's swipe left if you don't want it.
Whatever it is nowadays. Yeah, you're right. Yeah.
Yeah, that's
Yeah.
the way my brain would work. Because this is right, so I would swipe right. But I have
Very
no
good.
idea how
That's it.
stuff
Yeah.
works. So you did a lot of swipe, 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 swipe. Nope, 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 nope. So I want to set that expectation out there, folks. Bill did the hard work. Bill
Yes.
found the deal because he did the hard work other people didn't do. He knew his
That is
market.
the answer. Yes. Deal flow, deal analysis, and I had the network to pay for it.
Now, was this market in your backyard or a market you were familiar with?
It was, yeah. Backyard isn't about 30 minutes away from where I live, so
Fine.
backyard-ish. Yeah.
Yeah, so you could
Not
get
another state or anything like that.
a tall latte, drive away, and
Correct. I was at that property on a regular basis. Yes, correct.
or if you drink tea, you can get yourself a tea. I don't want to discriminate against anyone's palate here. Okay, and then financing. How did you finance the deal? How'd you pull it to the closing table?
Oh, interestingly enough, again, bit of a long story. So I got a bridge loan is the short answer, right? Because this property, again, was distressed. So it's not something that I could have walked into just normal bank, get normal loan because the numbers wouldn't have worked being a distressed asset. So I got a hard money loan. It wasn't a hard money loan because it was from an actual corporate lender. But it was bridge debt. It was about a 9% interest rate, and this was back even when interest rates were up at 6 or 7, and it was normal at 6 or 7. We were still at around 9. Again, real fast, what they had done is they said actual interest rate like 12%, but you have a floor of like 7%, right? So we're guaranteeing a 7, but we're going to start the clock at 12. And what we'll do is we'll stop that when you get to and bring it to 7, when you get to a 1.25 debt ratio. Essentially, they're saying, hey, we'll lower the interest rate when you turn this into a safe asset. So as long as it's unsafe, high interest rate, stabilize, we'll stop punishing you with the high interest rate. And I thought, great, hey, that's totally fair. So I had my feet to the fire to get the operations up and stable as fast as possible to lower my own interest rate. So that was the sort of creative like bridge loan that we did, and I got a $400,000 seller carryback as well, 10% seller carryback. So some creative financing added to that deal, not 100% creative financing, but it had a component of it.
So seller financing 400K.
Right. Seller carryback, second mortgage.
Oh, second mortgage.
Second mortgage, yeah. Yeah,
Uh,
primary loan was this 9%, 12% loan from the bridge lender. And then I had the seller carry back the second mortgage that the bridge lender agreed to. So, they knew I was doing that.
So if the second was 10%, I'm guessing that the purchase was 4 million.
Correct. Actually, that's exactly what it was. Yeah. Like
Okay,
4.1 or something. Yeah, right at 4 million.
so that's a bridge loan. I want to say variable, not that it was a variable rate, but it was
It kind of was not variable based on the interest rates of the Federal Reserve, variable on my operations, variable based on me getting leasing up, so my interest rate was actually coming down as I was leasing up. So that was the variation, was to go from 12 to 7, not to bounce up and down like an adjustable rate mortgage. Traditionally, it was not like that. It was only going to come down
based off of operations.
based off of operations. Correct.
On every show, I learned something. So this bridge loan that you're explaining to me is a concept I've never heard before. So
I've never done one before nor since, but it was a great idea. The bank came up with it, and I thought, genius. Yeah, I mean, heck, sure, it's a great idea. Why not? It's fair.
the bank presented this to you.
Correct. And let me rephrase. It was not a bank. I'm using the wrong term. We all tend to kind of throw those terms around a little interchangeably. A bank is a lender. A lender is not always a bank. Fannie and Freddie are lenders. They're not banks, right? So this was not a bank, as in go get a debit card, but it was a commercial lender, right?
Okay.
So it was not just like Joe, the hard money lender from the RIA group. Not like that. They were a corporate lender. I had a mortgage broker take me to this particular lender. So I had a professional mortgage broker involved, but this was the offer that they gave me. And so it started at 12, had a floor of 7, and blended, we wound up right around 9% blended when we kind of rose the occupancy up and then leveled off.
Yeah, thank you so much for sharing the mortgage broker. That's a very, very critical piece of this puzzle, because that mortgage broker had the relationships, made the introduction.
Yes.
You had a corporate lender who had a product
Yes.
that made this work.
Correct.
So
Absolutely worth mortgage broker in larger deals, 100% worth it.
So from the closing table to solid finance or institutional finance or whatever the word you want to use, did you go back to that mortgage broker to
Sold.
financing?
We sold, and that was that was the property we sold, right? So we, within under 2 years, I had taken the property in from a 2 cap rate to about a 12 cap rate, recompressed at sale to about a 7 cap rate.
Oh my
So
God.
we cleaned house. I mean, we bought it, obviously 2 cap rate, but remember now that's being at 60% occupancy to its $4 million purchase price. And as soon as I got the occupancy up to 95, plus we were actually able to raise rents on top of that. So not only do we lease up, we brought rent up on top of that. And once we had gotten the revenue up where we wanted it, I had taken the 2 cap to about a 12 cap. Market is about 7 at that time. And so then we were able to recompress for large capital gain in that a little under 2-year window. And that's the one that, yes, we made a good lick on the profit. I still wish I would have kept it. I still wish I would have kept it for the long term and had more of that annual and monthly passive revenue from that property as opposed to the big lump sum capital gain. I wish I would have held on to that property longer. But that's the full narrative of that particular story. Yep,
Well,
same deal.
do it again.
I'm looking for it. Believe me, I'm looking for that deal again.
It'll happen.
I am
It'll happen.
looking.
And you already know how to do it. You already
Yeah,
have, you've got the
absolutely.
recipe. So basically,
Yeah,
you're just going to bake another cake, and
yeah,
maybe this one has a different flavor frosting on it.
absolutely. Yeah, they're not common, but they do exist. They absolutely exist. They're not every deal. I don't want people listening to this thing. You're gonna go out and look at 3 or 4 deals, and one of them's gonna look like this. That's absolutely not true, but there are deals out there, and you can find them. But yeah, it's panning for gold. It takes a while. You got to sift through some dirt to find your nuggets, but you will if you look. You'll find them.
Well, I'd add a few zeros to that, maybe 300 to 400 to find.
These days, yeah, it seems like it, especially these days. The deal volume is just so low right now due to the interest rates being the way they are. But I think transaction volume will pick back up in some months. Loan maturity is going to cause that. That's a whole other conversation. But yeah, loan
Yes.
maturities these days is gonna force deal transactions here soon.
Yeah, I think we were talking about that
Yeah,
even before
it's
the
coming.
show, what's going
It's
on with
coming.
other investors.
I'm excited. Yeah.
And, I just want to say this again to drill it home to our viewers here. You got to do the hard work. You can't say, oh, I looked at 3 deals and give up. You're not going to get 6-pack abs doing one sit up. You got to hit those reps. You got to be consistent, 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 consistent. Even when you don't feel like getting out of bed, you got to do the hard work that nobody else is going to do. And then you'll find the deals that nobody else is going to find. So let's see. For the whole 2 years, did you keep that same bridge debt on it?
Yeah, and exited. So I always tell everybody, and this is what I always do when I get to the end of a certain period of financing or loan maturity or whatever the case, I always take a two-prong approach. One, stick it on the market. It's free. Call up a realtor, pick it, list it, throw it on the market, see what you get. And you don't have to sell it, right? And then second, go and see about a refinance and see which one will produce the greater of proceed. Well, this was the time that we looked at the refinance and we looked at the sale, and my partners and I just decided, well, let's go ahead and take our check and go home. So we decided to sell instead of refinance. In retrospect, I wish I would have refinanced them out. So they could have had their sale, they could have had their cash and gone home, and I could have still had the deal, yes, with higher leverage and less cash flow, but I would have been in that asset alone. And then I would have owned that by myself with you know good money every month coming from that asset. That's one strategy I wish I would have corrected. So if I would go back in time and tell myself something, okay, let's back up the recording back where I said, when you ask me what I go back and tell myself, don't sell this one here, man, don't sell. That's okay, there you go. That's a better answer. That's what I go back and tell myself. I'm going to remember that next time somebody asks me. Tell
Well,
myself, go back there, don't sell.
you can't beat yourself up, and I won't allow you to beat
Yeah,
yourself
right.
up because you built a recipe to bake that cake. You know how to do it. You can do it again. So if you had never
Well,
done it,
yeah, and you know your metrics, and you need to know what you're doing, because see, I can tell you a complete reverse story. Atlanta, Georgia. Here's a property that's on the corner of Main and Main, and the market's not doing great in Atlanta, and that property won't cash flow. And I look at it and I say, well, I can't buy it. It doesn't cash flow. It's not worth it. Within 4 or 5 years, it's gone up like 600% in value. Okay.
yeah,
Who cares about cash flow when a property goes up in value like that? I could have made millions owning that. Yes, but it didn't fit my buy box. I looked at it. I said, this property does not cash flow. It does not hit my numbers. I don't want to bring on investors for this. Who would have known, speculatively, the value was going to do that? I didn't. There's no way I could have known that. So you're right. We can walk down the street once you've been in this business for a while and go, oh, I remember that one and that deal, and I should have had, and I could have had. No, I know you can't live in that world, right? You really can't, because you're gonna wear yourself out. But I could walk down the streets of many cities going, oh, yeah, that one and that one. And that. What are you gonna do? What are you gonna do? You win some, you lose some. You do the ones you can, keep going.
You bring up a really, really valuable point I want to expand on. You can only compete with yourself in this business, or anything that you're going to try to do. You can never look at, okay, well, they did self-storage and I'm doing this, and they made that return and I only made that return. You're comparing bananas to oranges. It's not the same fruit, not the same tree, not the same industry. All you can do is look at yourself, look in the mirror and say, did I do better this time? Did I do better this time? And just pace yourself on that. You nailed it. It wasn't in your buy box. It wasn't in
My buy
I don't
box.
I don't want to say comfort zone, because half of doing all this is being uncomfortable, but it wasn't in your buy box. It didn't fit your metrics. You can beat yourself up saying coulda, woulda, shoulda, but you still worked out okay. You still got all your toes, your fingers. Jake and Lola are happy.
Yeah, exactly. Right. Exactly. Now,
It's like,
getting outside of your buy box is now gambling. And that's what I looked at that and said, okay, that is purely speculative. My math says that property will not make money at that price today with the way I'm going to buy this deal. The end of the story. And I was not a speculative buyer. I was not a gambler. Had I, sure, I would have won and made millions, or not and gone into foreclosure. All just depends, right? So that's where I'm just not that kind of buyer. I buy on metrics and math, and it didn't have it. But I can look back and say, gosh, I technically got that wrong, didn't I? Because the value went up, millions of dollars, and I didn't buy it. But I don't really beat myself up over that, because I know I stuck to my metrics, and some things fall out of the above and below. That's just how it works.
yeah, and your metrics work for you. I mean, even us, we have deals that we didn't know a market. We bought something. It's like, oh crap, we bought in the wrong market. We disposed of it as quickly as possible. Did we recover? Are we fine? Yeah. I think of real estate as a slow moving train. Like, the market can go up and down. I think the fastest part of the market is like a roller coaster, right? You'll see it going up, 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 up. And then when it goes down, it's a fast ride.
That's
So,
right.
but
What do they say? Bull goes up the stair. No, bear. Yeah, bull goes up the stairs. Bear goes out the window. That's what they say in the stock market. So same thing, right? The inclining market is slow, steady, and inclining, right? So the bull goes up the stairs, and the bear market goes out the window. It drops quickly, and I think that's a pretty accurate comment that you just made about real estate as well. It's long and slow and flat on the up, and then short and dramatic on the down. Yeah.
and we're just waiting for it to hit to a spot where it makes sense to jump back on the elevator. And just to cap that part of the conversation off, you stuck to your math, you stuck to your metrics, you came out healthy, no one to compete with other than yourself. All you can do is improve your operations. Instead of doing 12 sit-ups, do 20 sit-ups, right? Whatever that metric is. And Bill, you may not know this. I didn't say this before, but since I moved down here, I've lost 115 pounds.
I can tell. I mean, you are half the man you were. Yeah,
So,
I can tell. That's why I just said at the beginning before you got like, oh, so, wow, you're looking really fit. Some of these questionable things like, oh gosh, you were much larger before. It's kind of remember.
yes,
But yeah, you look great. You have lost a tremendous amount of weight. I absolutely can tell. You look wonderful.
thank you so much. And motivation, right? You do vision boards, you do whatever you got to do. I've got my before and after up here. I've got 300 pounds and I've got 185 pounds, and Grandpa's got a 6-pack. Actually,
Excellent.
Grandpa's got an 8-pack.
Here you good for you. Good for you.
And I'll say it again: you compete with yourself. So yeah, that was really great, and so much there. And you know, now I'm going to kick myself because I haven't been checking LoopNet. But now I've got a team that can do that for me, so that's even better.
Oh.
All right, so let's keep moving it here. What is the biggest hurdle you've ever had to overcome as a real estate investor, and how did you solve it?
Yeah, kind of really literally that same mentality kind of concept. The hardest thing I've ever had to do as a real estate investor was dealing with failure. Deals not working out as well as I thought they would, or watching doing a lot of work putting a deal together and then watching other people make the majority of the money. Did that a few times in the beginning, things like that, and not getting too discouraged and not wandering off. That's probably the toughest. That for me, was yes, getting over some of the failures and sticking with it. The answer that I tell other people, because you asked me what was mine, but the one thing, Brian, that I see is probably the biggest for most people in the business: boredom. They just get bored and wander off. I have had so many students that have fallen victim to just plain old life. Things get in the way. They find, and so everybody's expecting this big answer, like, what's the number one reason people fail in the business? Oh, it's got to be foreclosure and bankruptcy and this bit. Nah, you just wander off and just don't come back. Get bored. You just don't do the
So
work. You don't do your 3 deals a week. You do one, then two, and then you got to get around to it. Then you sure meant to, and then, in one day you're just like a diet plan or a exercise plan or something of that nature. You sure mean to do it, and you just don't.
I'm going to add to that, and absolutely 100% correct, Bill. Yeah, boredom. And then when you get successful, boredom, because I say this to my son all the time, doing that boring thing over and over and over again, you'll be successful at it. It's not what's the new exercise, what's the new app, what's the new market, what's the new creative way to finance it, where's the next
Correct.
place I'm going to buy. Don't you got to stay laser focused on what it is you do. Going back to what you said, didn't fit your buy box, didn't fit your map, didn't fit your metrics, you're successful. Yeah.
It should stay there. Yeah. Yeah, yeah, yep. That's it. Just and I tell everybody that real estate is a dark office staring at an Excel spreadsheet most of the time. I mean, like, this is a real estate business, really, and people think it's like riding around the back of the limo and come out on stage and high five and cutting the ribbon and silver shovels and all this garbage. Yeah, maybe sometimes. 99% of the time, it's just you on a spreadsheet. Money is made on a spreadsheet. That's where the money is at. It's in the analysis. It's on that spreadsheet. It's not out here in the big high flying, events that you might see people do occasionally, or that people that want to kind of get your attention will highlight and show and, show them in a short, edgy video of them doing neat short clip video stuff. Look, that's not real estate. They don't show you a lot of clips of them sitting at home, in their pajamas on a computer screen. That's real estate. That's,
Yeah.
that's
three
the
o'clock
business.
3 o'clock in the morning crunching numbers.
Yeah, exact fun. I mean, and that makes a really stupid looking video to put on YouTube. You sitting at a computer with a cup of coffee in your pajamas. Real estate. That's it though. That's that's the business. That's not a great commercial. So I know it tells you that. Oh,
you
I'm
know
not selling you anything. So there you go.
it
There's the truth.
may not be a great commercial, but boy is it the truth.
Yeah, it's everybody, and that's why people get bored, and I think that's why we have so much failure, is because so many of these people out here are gurus only in the sense of signing up people, not in the sense of really teaching them. And so as long as they get people to sign up, they don't really care about the fulfillment of the teaching beyond that. So how do you get everybody to sign up? Well, you feed them cake. You're going to get rich. It's going to be all this amazing stuff, short, fast, edgy videos, and TikTok and all this garbage, and that's just not true. Because I've tried to stand on stage and I've tried to sell an information education product at the same time as telling everybody the truth. And Brian, they all but threw rotten tomatoes at me. I mean, I was dodging stuff. Nobody wanted me to stand on stage, tell them the truth about the business, and then at the same time say, hey, run to the back of the room and sign up for my program. It was not a fit. It didn't work. And so I decided I was not going to be one of those kind of sales teachers anymore. And I quit doing that. And I don't do that anymore. I do teach. I do have, a program. I don't sell like that. I don't go around to get on stages and tell everybody to run to the back of the room. I just don't do it anymore. And I've never been a big program either. Don't want to be. Don't want to be one of these big names with the lights and the salespeople. And we know who we're talking about here. But
Yeah.
I'm good. I'm
This
not
is a
doing it.
relationship business. That's it. You know, people are going to see through all the hype. They're going to see through all the smoke and mirrors, and they're either going to trust you or they're not going to trust you. And then you move forward from there. That's it.
Yep.
Let's see. You solved that. You answered that. You did that. You're doing great, by the way, Bill. So I like what you said. Money's made on the spreadsheet. It's not glamorous. It ain't sexy. And I'll keep saying it. You got to do the hard work that nobody else is going to do.
Yeah, and don't get bored.
It's building those relations and having that follow up too, like some relationships are great. You can pick up the phone after 5 years and carry on the conversation. Some of them you're going to work on and build on. All right, we're cruising right along here. So you'd already mentioned one book, but I'm going to ask the question again. Maybe you have a different answer that's not purple.
So okay, sure.
We'll see where it goes. It's your show.
Sure.
So was there a book in your investing career that had the biggest impact on you, Bill?
So that is actually a relatively easy one. I would say the book Getting to Yes. And then I'm going to tell you he's got it. All right, there you go. Absolute classic. And then I'm going to follow that book up with a more modern book, Chris Voss, Never Split the Difference. All right. And so I always tell everybody these two books are phenomenally important for your education and business for negotiation and understanding of negotiation. And what I tell everybody is you really want to read Getting to Yes first, and then read Chris Voss, Never Split the Difference. And Getting to Yes is by Robert Fisher and William Ury. Apparently you have that in your hand there. You got to put them in alphabetical order so you can find them, get you number system there, right? Yeah, but all right. So Chris Voss has the modern book. So many people have heard it. Never Split the Difference. Excellent work. But Voss really kind of references a lot of stuff in that book, and what he's referencing is all in this book, Getting to Yes. And so I had just so happened to have read Getting to Yes, a book on negotiation, by the way, and then I read Never Split the Difference, and so it made perfect sense, and I could tell what he was referencing, right? And so if you've read Voss but you haven't read Getting to Yes, I recommend you go back, read Getting to Yes, and then start over again and read Voss again, and you're going to get the second book in a different light. Now, both have a phenomenal amount of information. That Getting to Yes really teaches you sort of the business type of negotiations, some really important aspects. And then Chris Voss teaches you really how to think about negotiation in a real life way. And so, yeah, those two books I would say together. I could pick out a few other ones, but those two were really influential and really helped me become a better communicator, not just a better negotiator, but a better communicator, because it taught me how to think about how people think and how to, look at different aspects of communication and negotiation, not just what I want, high, low, yes, no, this kind of negotiation. And so those are two books I would say that you definitely want to go check out.
So Getting to Yes is back there somewhere.
Somewhere. It's in there, isn't it? Okay.
I know it's a small little paperback book.
Uh-huh.
Blue cover. I just can't find it.
It's it's been written 80s, 90s. I think this was written a while back, but
and then Chris Voss, I did have to
excellent.
find that one on the shelf. He was an FBI hostage negotiator. So
yeah, totally different extremes on the point of view of negotiation. And that's why I say it's a combo. It's almost like they ought to just glue those two books back to back and be like, here, you can't read one without the other. And start with Getting to Yes, go to Voss, go to Getting Never Split the Difference. You're really going to come away with a much greater understanding of communication and negotiation. And those are very important points, especially, and I'll tell you, especially in creative financing. That's a real big part of what I teach about creative financing is creating value for the other side, not for yourself first, but for the other side first. And the way that you do that is exactly what Voss and these people tell you how to do in these books, which is the discovery, the communication process, asking, how do I do that? Why, and all these different questions, getting down to the real reason somebody's up to something, and then solving that underlying problem, not the position that they're in, but the underlying reason, and solve. It's called positional bargaining, and you want to kind of use that. But that's what I've done that many times in creative financing. Why are you selling? And you'll find out that it's not money, it's some other reason. And then you're able to use a creative solution to solve that underlying reason they want to sell. Why do you want to sell? Oh, I just need to get out of here. No, why do you want to sell? Why do you want to sell? Oh, I'm a burned out landlord. I'm tired of toilets, trash, tenants. Hey, we could do a lease option. We could do lots of other ways to solve that headache. It might not mean me actually writing you a check. And so that's stuff I learned from those two books, actually.
Just had a conversation with someone at this conference. They're buying businesses from people. And sometimes the answer isn't to buy the business because they're in love with that business. Sometimes the answer is to help them solve the problem. So
Right. Yeah, absolutely.
it doesn't always have to be a gain. If you can help someone along the way, who knows? 2, 3, 4, 5 years down the road, they'll remember you helped them solve that problem. They may reach out to you. That's
Absolutely. And keep in mind that not everybody's selling for cash. There's lots of reasons people sell stuff, businesses, assets. Everybody thinks if someone's selling, it's because they are here to make a lot of profit. That is not always true. Some people need to sell because they're burned out, they're tired, they don't understand the business, things have changed in their life. I mean, it goes on and on. And it's in those underlying aspects that creativity lies, right? That's where the art of creativity is, beneath the surface of why somebody's doing something. And that's where real money's made.
so. I'm going to push this question a little further. You gave me 2 books. Is there a third book?
Oh, yeah, there's lots of them, but there you go. That one. Let's see. Can you let's get the focus. The Prince, Machiavelli. There you go. The Prince. There, the old, that's the newer version of it. Machiavelli. There you go. Got to read that one. That's classic. I keep it right here at hand. Reference that one a lot.
That's
Yeah, that was probably another one. I've got several other ones, but that's a big one. I think Niccolo Machiavelli was a tremendously misunderstood individual as far as modern society references that work and that individual, and a complete genius and terribly misstudied, misunderstood piece of work. So I recommend anybody that had to read it in high school, go back and read it again as an adult, except this time, think about it from like a company perspective or a business perspective instead of kings and queens and stuff. Think about a corporation. Read the book that way. You'll get a different point of view.
so. Could you give me a couple sentences on why you think that book is misunderstood? How people are probably
Oh yeah, easy. First off, the quote, it's better to be feared than loved. Well, that's a horrible understanding of what he has. It's not what he said. It is what he said, but it's not what he said. So he says it's better to be feared than loved. Yeah, if you have no other choice, but it's better to be respected than any of those. See, people chop all that off and they leave off the rest of the concept that he was trying to impart in that particular concept. And they truncate that down to it's better to be feared than loved. Okay, so Machiavelli says it's better to be a jerk to everybody than to be loved or respected, because as long as you have fear, Victor, that is absolutely not what he said. He's actually saying completely the opposite in the book, that if you rule through fear, through that point, you will take people to a place where they hate you. And then you can't rule them at all. And so that's his whole point. It's better to be loved than feared, up to a point that those people do not hate you. Like if you absolutely have to choose one or the other, sure, but you have to have an understanding. See, and this is completely taken out of context, and so a very misunderstood quote. And therefore, I believe people kind of use that snapshot concept. Oh, better loved than feared, and all this. It's a meme concept, a little meme slogan that's garbage. Totally recommend that you read him. He's actually, again, I think a very not what people think when you think, oh, Machiavelli. No, he's actually a very peaceful individual. He's a very good person at telling you how to calmly and logically and run a company, country. And it was totally the opposite of this sort of what you would think when you make that comment, fear over love. That's not what his point was at all.
Thank you for clarifying that. And
Sure. Give me on the soapbox. I get on that one.
no, that's your show. The Machiavellian concept is all over the 48 Laws of Power. And, 48 Laws of Power, I've got mixed emotions on. I'm not going to bash it. I'll just leave that on the table. But yeah.
And I have not read that, but I will go so far as to say I bet you they don't understand his actual work. I will go, because most don't. And most people misrepresent the context, the intent of what his book says, right? And they take it into something that is not what his intent was. This sort of draconian rule by force concept, that is 100% not what he meant.
Yeah, that I think my nature and my fabric is not 100% of what the 48 laws of power are about. I believe that you can help people and not take advantage of them and not do these power plays. I mean, if we can all rise on the tide together, I think that's a much better thing than trying to sink somebody else's battleship. Not
Yep,
not
yep.
my cup of tea.
Again, you're right. Because that's Machiavelli's entire point, and then on that entire book is if you take people to that extreme, you're not going to run squat. They're going to turn on you. You can't do that. You can't take from everybody. You can't always be about yourself, always taking from everybody. You can't always be feared rather than loved. You can't do that because it's an unmanageable, unsustainable country, and that is his entire lecture to the young Italian prince, which was what the book was written for, was a manual to this young prince, the prince. And so it's his instructions to the young prince on how to run a country. And so he's telling him actually exactly what you're saying. Don't be a jerk. It doesn't work out.
Yeah, and I think you're nailing it because in several of the chapters in the 48 laws, there's that like disclaimer at the end says, by the way, if you do follow this Kool-Aid, be prepared to get run out of town. So
At least they put the disclaimer
yeah,
at
it's
least.
um, yeah, you can push this far, but just know that there's an exit, and that exit will be you. And I can't tell you how many times the story ends with somebody becoming beheaded.
Lovely. Hey, what's the ROI on that one? Beheaded.
Oh,
Great.
business is great, but don't lose your head.
Yeah, really. Great.
So
Yeah.
I've got a curveball question I throw in here that's not on the script.
Okay.
So this one's always fun, and this one usually ends up in the sizzler on the show. So what question did I not ask you that I should have asked you today?
Oh, yeah, I probably don't have any great answer for that. Yeah, I can't. Where do I send the check?
To Bill Ham at, and I'll make sure they.
What's your wire account? Where do I send the money to? No, no, Brian, you've been great, man. It's been a great interview. I appreciate all the questions. How do people get in touch with me? I guess maybe about the only other thing I could think of that you could ask at this point.
Well, that's coming, but I'm going to drill here a
Figured it
little.
was. Other than that, no, I really don't have anything to add to that. You've done well.
So, was there an expectation that was in the back of your mind, knowing you were coming on this show? It's like, oh, he's probably going to ask me about that, and there was something you wanted to talk about.
Well, you started about something, how do you get started? First, tell us about your first deal, stuff like that. Yeah, pretty good. No, the only other thing I think that I would add that we haven't talked about is I do have a coaching program and I have a website people can go and check out in these two books. And other than that, no, life's good and everything's good. And follow me on social media, I guess is stuff normal people say. I don't know. Whatever. Click like and subscribe, I think I'm supposed to say now or something, whatever.
We'll get there.
No,
We'll get there.
we'll get there. Yeah,
So,
but like I said, no, I'm good. Appreciate everything.
so here we are. We've heard your story. So happy to see you again, Bill. And you
Yeah, it's
do.
been great. It's been a while.
So, what's next for you in real estate, and why not get started today?
Yeah, well, I am started today. Well, okay, why not start today? Because I never quit. That would be my first answer. And I tell people it's good to be fast. It's better to be first, right? So just don't leave. People want to time the market. People want to jump in, time this, that, and the other. Well, you don't have to time the market if you never leave, right? And that's why I say, yeah, it's good to be fast. It's better to be first. Just don't leave, and you're always first. So, I'm here. I'm running my business like I always have. I am changing the purchasing strategy. So I would say there are micro changes in the business, no macro changes. I'm still a buyer, still fundamentals of multifamily, still, as you pointed out, all of that is phenomenal. Pricing, along with interest rates, a little bit off. One area that I am concerned, and again, we could probably do a whole nother show on this one topic. One area that I'm a little concerned with in the multifamily space that I am keeping an eye on and kind of adjusting my buy box for is aging assets. And that's becoming a pretty, I want to say hot topic, but it's really probably more like a rusty topic. These buildings, these older buildings, the plumbing, the electrical, the infrastructure, some of these buildings, are really getting a bit too old. And the cost basis, what you're going to buy it for, what you got to ultimately put in there to make it work is really starting to become too much. And so I and my company are not really looking at anything older than about 1990 right now. So that's one of the major changes. And I know really technically for a lot of people that's a minor change, but big for us. I've done a lot of value add in the past. I've done a lot of C assets, affordable housing, big renovation projects. Gonna cool off on that for a few years, I think. Do some B pluses, A minus, just good. Hopefully pick up a few of them at a decent price and set it, forget it, kind of hang on to them for a few years. So that's the shift that I am going to have in my business. But yeah, micro shifts.
So that's what you're going to do. That's what's next. And why not? You never started. Like you said,
I never left. I'm not, yeah,
left.
still here. Just another Tuesday.
Good to be fast, better to be first. You're still in there. You've just tightened up your parameters, tightened up your math, tightened up your metrics, and you have a tighter grouping on your target, which I think is brilliant. You know, as you go on in time, all investors, your risk is going to change the older you get. You've got more time at the beginning, less time at the back. And what you might think was a good deal at the beginning, where you've got time to correct at the back end, like you said, A minus, 1990, B properties. It's a tighter grouping. I think it's very smart.
It is. Yeah, definitely.
All right. This has been fantastic. And now I'm going to ask, if our viewers want to get in touch with you, Bill, how should they reach out to you?
Absolutely. Easy. So one is these two books, they are available on Amazon.com. So I don't sell them. You can get those there. My website is realestateraw.com, just like the book, realestateraw.com. I've got a ton of free information on there. I've got about 80 or 90 articles that I've written, probably almost a whole nother book's worth of articles on a blog in there, videos, bunch of free content on that website. So you can check that out. And then my email, be happy to give everybody my email. It's bill@gobroadwell.com, just like our company, Broadwell Property Group. It is bill@gobroadwell.com, BROADWELL. And if you would like to check out my portfolio, that is Broadwell Property Group. Yeah, BroadwellPropertyGroup.com. And you can go actually check out our professional resume, but realestateraw.com is my education platform. So those are the ways to get in touch with me. I'm on all the social media platforms, pretty easy to find. Got a lot of content out there. I do a lot of content each week on LinkedIn, different platforms. So check it out.
This has been phenomenal, Bill. I want to thank you again for being my guest on the show. It's so good to see you again. So here we are at the end of another show. My guest, Mr. Bill Ham.
Appreciate you having me on. It's been great.
Good
to see you again. Yeah, it's been a while. I stay in touch. You know, it's great to see you again. Now that we're caught up, well, I'll have to swing down for some vacation time. We'll get a margarita on the beach.
Well, hey, Bill, I'm sure that we can figure out a way to make that a great tax deduction for you. So here we are at the end of another show. All my real estate ladies and gents, peeps. This is Brian Lucier from the Why Not Real Estate Podcast signing off, and we'll see you on the next one.